Markets are higher this morning. We've got a little bit of a rally underway after a sharp sell-off yesterday. It is driven by technology, and of course, that spike in bond yields sent markets plummeting. This morning, Dow Industrials up 221, the S&P up 34, and the Nasdaq up 152. Federal Reserve Chair Jay Powell facing tough questions yesterday while testifying on Capitol Hill. Powell telling lawmakers he expects elevated inflation to stick around for the coming months before moderating, as we told you yesterday ahead of that testimony. Joining me right now is Andersen Capital Management Chief Investment Officer Peter Andersen. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell and Ironside's Macroeconomics Managing Partner, Director of Research, Barry Knapp. Great to see everybody this morning. Thank you so much for being here. Peter, kicking things off with you, your take on that big sell-off yesterday. Obviously, we're looking for a rebound, but we haven't had anything decided in terms of spending, the debt ceiling. Would you buy this rally?
Maria, I always buy, continuously, frankly. I mean, these things, we're used to these dips now. I mean, it's hard to say, but it's the truth, right? I mean, we have seen these dips for many, many years, and I've been in this for many, many years. So this is a time, if I have new money coming in with clients, absolutely. Yesterday was a perfect time to buy. It takes a lot of courage to do that, given the most uncertainty we've seen in a while. But I do believe the debt crisis will definitely be resolved in time.
So I mean, the country has never obviously defaulted. Investors are watching this drama in D.C., though, and the CEO of J.P. Morgan Chase, Jamie Dimon, saying that the bank is preparing for potential U.S. default on its debt. Jamie Dimon calling a U.S. debt default potentially catastrophic, as Treasury Secretary Janet Yellen told lawmakers that the U.S. could hit its debt limit as early as October 18th, Peter. I know you're not betting on a default, but are there areas that you want to be hiding in this market? Should we see some continued volatility?
Oh, absolutely, Maria. I mean, first off, I do think it's important for everybody to chime in and give their opinions. We can't get lackadaisical about this deadline approaching. So it is important for people like Mr. Dimon to make those comments. I'm not trying to trivialize this issue, but we all know we've been through this many times, frankly, over 10 times, and it always does get resolved. So that's one point. But then the second point is, yes, I think there are many companies that are not as sensitive to interest rate hikes, mainly service companies where you don't have high cost of goods. You talk to small companies around this country, most small companies are really suffering from inflationary price increases on their cost of goods sold. If you look at service companies, certainly there's labor increases, but I would go with those much more than I would with heavy, capital-intensive, always continuing to buy new products. I mean, we see across the country products from pool supplies to semiconductors. All those elements are very much higher priced, and I don't think they're going to go down any time soon.
Yeah, I'm wondering if this drama in D.C. impacts the broader macro story. Barry Knapp is with us this morning. Let me bring him in. Barry, your thoughts on all of this drama in D.C. and whether or not we are going to see this impact markets, the broad economy. I know you're looking for growth. Anything change?
Well, my framework for thinking about this year was all the pullbacks would be no bigger than 4 to 6% until and unless policy tightened. So for me, what yesterday was really all about was the Fed reducing their purchases in tips in particular. We've had this big move in real rates, which is a tightening of financial conditions. And so that's absolutely of concern. I think it's probably, when all said and done, worth a 10% pullback, which I would absolutely buy. The tail risk that you're talking about, though, is the 2011 scenario where you had fiscal and monetary policy tightening at the same time. And so I remain very concerned about the size of the tax hikes, about drug price controls. A border, energy tax is a little more complex issue, but that could be a problem for the markets as well. So the D.C. issue definitely increases the downside risk here. Now, again, I would probably buy it because I do think that these things have a way of working themselves out. But I'm less concerned about the debt ceiling, more concerned about tax policy is how I would probably
absolutely
sort my statement.
Understood. And Peter, we still don't know what kind of taxes come in. Give us the final word here, Peter. Are we looking, do you want to change your allocation? Should we get those higher corporate taxes, higher capital gains taxes as well? Would that change your mind in terms of allocation into stocks?
Yes, it certainly would. I mean, there are some sectors I think would be more sensitive to tax increases, but Maria, there are tons of great companies out there that are trading at a discount. I know a lot of people think everything is fully valued, but you can still find stocks, especially that have taken it on the chin yesterday. We haven't had a chance to talk about technology stocks, but that's a whole other story. And I am very bullish on mainly the large tech stocks because I do think that they still have value, and regardless of what the tax rates are going to be, people are not going to stop listening to music, getting data, etc.
Even as interest rates rise, because these are the companies that really take a hit when rates go higher, which is what we saw yesterday.
That's right. And, if you ask somebody if interest rates go high, are you going to give up your cell phone? Just for a simplistic example, nobody's going to do that. They're still going to want, they crave data. We all need that, regardless of what the tax situation is going to be.
Peter, it's good to see you this morning. Thanks so much for weighing in. We will talk soon. Peter Andersen joining us this morning.